As the government shutdown continues, there are potential changes in the works for the IRS, which employees are working during the shutdown. And I have a follow-up question about private tax collection agencies, how those are affected with the shutdown. Thank you for tuning in to Tax Justice Warriors.
Welcome to Tax Justice Warriors, the podcast that celebrates the work of low-income taxpayer clinics, focuses on tax controversy work, and looks at related issues in tax news. I'm your host, William Schmidt, the director of the Low-Income Taxpayer Clinic at Kansas Legal Services.
Some news this week regarding the government shutdown and the IRS is that the Trump administration states that they are directing the Internal Revenue Service to issue tax refunds during the ongoing federal government shutdown. This is a reversal of previous policy that during past shutdowns there would not be tax refunds being sent out. But there is a quote from Russell T. Vaught, acting director of the White House Office of Management and Budget, saying that tax refunds will go out. And then a call with the chairman of the Ways and Means Committee, Richard E. Neal of Massachusetts, with Treasury Secretary Steven Mnuchin. They were saying that the administration will call back a significant number of IRS employees from furlough in order to issue the refunds. Mr. Mnuchin also told Mr. Neal that the IRS would open the tax filing season on time at the end of January, with enough employees returning to work to allow the IRS to answer 60 to 70% of phone calls seeking tax assistance. Again, those employees would not be paid until the shutdown ends. That portion was from a New York Times article from January 7, and then there is a Washington Post article from the same date quoting former IRS Commissioner John Koskinen, because Social Security payments have gone out during government shutdowns, but he was stating that those payments have long been allowed because those are considered essential protecting life and property. Typically, IRS refund payments have not been considered part of that category. He does not think that those two payments are the same, that Americans rely on monthly Social Security to survive, while IRS refunds are typically a one-time payment. It's a different kind of animal, Koskinen said. Delaying Social Security payments are, almost by definition, more likely to threaten life because they go to the elderly and disabled who depend on them on a regular basis for food and medicine. Delaying IRS refunds may be inconvenient. Turning back to the New York Times article, part of that focus is that the Trump administration is allowing these tax refunds to go out during the shutdown in order to gain popularity. But one of my questions is how the tax reform will play out during the tax season. So I'm wondering how the popularity will continue throughout the tax season, whether the tax refunds are allowed to go out or not. All of this political popularity with tax refunds and the IRS being part of the tug of war, whether this boosts popularity for one side or another, this remains to be seen. One of my comments about Commissioner Koskinen's quotes regarding Social Security payments and IRS refunds, I think it is debatable whether IRS refunds are essential to protecting life and property, that many of us who work with low-income clients would certainly debate that for the low-income families who essentially wait year-round for their annual refund to come, that they use those to survive, that we would certainly say that for several of those families, the tax refund is essential for life and property. So it is certainly debatable that those low-income families would need those to survive. So I certainly think that that is an argument with former Commissioner Koskinen's comments. Now, next I wanted to turn the focus to private debt collections, that the IRS is working with private tax collection agencies. This was part of the federal law enacted by Congress in December 2015, the Fixing America's Service Transportation Act, the FAST Act. That required the IRS to use private collection agencies to collect outstanding inactive tax receivables. Now, there are 4 private collection agencies, CBE out of Waterloo, Iowa, Conserve, that's capital C-O-N, capital S-E-R-V-E, out of Fairport, New York, Performant, out of Pleasanton, California, and Pioneer, out of Horseheads, New York. And the IRS states on their website that they do not assign accounts to private collection agencies involving taxpayers who are deceased, under the age of 18, in designated combat zones, victims of tax-related identity theft, currently under examination, litigation, criminal investigation, or levy, subject to pending or active offers in compromise, subject to an installment agreement, subject to a right of appeal, classified as innocent spouse cases, or in presidentially declared disaster areas and requesting relief from collection. Now, there is confusion about the private debt collection contacts because with scams, the IRS has said that they will not be calling people, but the private debt collection for taxes, they are using phone calls to contact regarding collections. So one of the statements about that is those people who are contacted by the collection agencies should be receiving letters in advance, should be on notice that the IRS or a collection agency is contacting them about this debt. But it is certainly something to be aware of that there is confusion regarding scammers with those collection agencies. If there are complaints about private collection agencies or to report misconduct, contact the Treasury Inspector General for Tax Administration Hotline, or TIGTA, T-I-G-T-A. Their hotline is 1-800-366-4484, or visit tigta.gov. Now, there have been following reports regarding the private tax collection agencies that the goal set by Congress has been to collect $2.4 billion in additional revenue through fiscal year 2025, but as of May 31, 2018, total program revenue was $56.6 million, which was just $1.3 million more than its costs of $55.3 million. That they have collected about $4 million a month during the first 14 months of the private debt collection program, so that is far behind the rate needed to reach $2.4 billion. At their current rate, according to the Washington Post article I'm quoting, it would collect about 20% of the committee's estimate by 2025. It also should be noted that there was a TIGTA report that, from their audit, that the private contractors hired to collect overdue federal tax debt are not adequately securing taxpayer data. Now, it is in the best interest of their strongest supporters in Congress that the strongest supporters in Iowa and New York, which happen to be two of the locations where those private tax collectors are located. So it is certainly in the best interest of those senators to keep the private tax collections going, whether they are performing badly or not. It is my question how much the government shutdown is affecting these private debt collections for taxes, that since they are private agencies and not government agencies, it follows that they would still be working during this time of the shutdown, but my guess is that they would be working with less IRS guidance on what to do with various cases. So just what is happening with these cases during the shutdown with the private tax collections? I think that is certainly something to ponder at this time. As a follow-up, there was a press release on January 7 that the tax season will begin on January 28. IRS Commissioner Charles Rettig is quoted as saying, "We are committed to ensuring that taxpayers receive their refunds, notwithstanding the government shutdown. I appreciate the hard work of the employees and their commitment to the taxpayers during this period." The IRS news release states that the IRS will be recalling a significant portion of its workforce currently furloughed as part of the government shutdown to work. Additional details will be included in an updated 2019 lapsed appropriations contingency plan to be released publicly in the coming days. Commissioner Rettig also states, IRS employees have been hard at work over the past year to implement the biggest tax law changes the nation has seen in more than 30 years. The filing deadline to submit 2018 tax returns is Monday, April 15, 2019 for most taxpayers because of the Patriots' Day holiday on April 15 in Maine and Massachusetts and the Emancipation Day holiday on April 16 in the District of Columbia. Taxpayers who live in Maine or Massachusetts have until April 17, 2019 to file their federal tax returns. Now, looking at this release, it does not say that all IRS employees will be returning to work, so I do not know if any of our negotiations with the IRS concerning tax court cases, appeals, or any other tax controversy issues will be dealt with during the government shutdown, but it sounds like there will be IRS employees coming back to work in order to process returns. Now, one of the other news articles talked about employees coming back to work to man the phones, but again, I do not know if, say, the practitioner priority service will be fully up and running, or if they are just limiting questions to the 2018 tax return preparation process. So once I know updates, I will provide those, but that is the tax news at this time for the week. Thank you for tuning in.
Thank you for listening to Tax Justice Warriors. We have a Patreon page if you'd like to support this podcast. Providing monetary support for this podcast helps with expenses like equipment or travel to tax conferences. Supporting this podcast through Patreon comes with rewards, so check out our Patreon page. Please rate or review this podcast because positive reviews help get more people to know this podcast exists. The views expressed on this podcast are not official opinions of the IRS, the Low Income Taxpayer Clinic program, or the employers of the people who spoke on this program. Your tax situation is unique, so do not take the statements on this program as tax or legal advice. Consult with your own tax professional to provide you with specific advice on your situation. Tune in next time on Tax Justice Warriors for another interesting tax discussion.